I think it was a stellar quarter. Look, the revenue grew 8x year over year. EBITDA grew 19x. It was, though, in line with expectations. They had pre-announced these numbers ahead of their listing. Now, the key debate on Coinbase is whether they can continue to grow in the face of intensifying competition from the likes of PayPal, Square, banks, brokerages, who have user bases 10x the size of Coinbase. And we believe it's going to be challenging. And this is the reason why we initiated with the market perform rating, price target $250 on the stock. The key highlight from the quarter was the emerging evidence in Coinbase can diversify revenue away from retail crypto trading. The notable was Coinbase Cloud, which could be the AWS of crypto over time. It's very early days, though. Retail crypto trading is their bread and butter, and we believe they're over-earning there as an industry.
How do we look at Coinbase, Harshita? Do we value it like a CME or an ICE group, which owns the New York Stock Exchange? Do we value it like a PayPal? Is there anything analogous to Coinbase?
Yeah, no, that's a great question. And I think you can be a bull and bear. If you want to value it like a PayPal and put a PayPal multiple, you're a bull. If you want to value it like an exchange, you're a bear. I think the fact that 90% plus of their revenue comes from retail crypto trading means that it needs to be valued as an exchange/brokerage, which if you assign those kind of multiples on their revenue, then you get to a price target, which is our price target of $250. The thing is that I hesitate to put a PayPal-like multiple on Coinbase, which may have this peak revenue in a cycle. So it's hard to put a peak fintech multiple and peak revenue in a cycle.
Because if you believe that a company like a Coinbase or an exchange, Harshita, it just makes their money because people buy and sell other things on their platform, you need to also believe that people will continue to be interested. Right now, cryptos are booming. Huge interest, right? I mean, how do you see, at some point the cryptos may slow down. Who knows? Don't know. But if they do you still see the level of trading interest in buying these 45 or 50 plus different types of cryptos that exist right now?
Yes, in a way, it's easier to forecast long-term for crypto versus the near term, which I think is going to be incredibly volatile, and like the trading volatility is almost anyone's guess. I do think that in the long term, crypto, and I agree with Alicia there, which is that this is here to stay. This is an incredibly disruptive technology, which is analogous to TCP/IP for the internet, and we are in very, very early innings. So over the long term, crypto market cap should continue to grow, and trading volume should also be somewhat elevated because of the 24/7 architecture of some of these assets. In the near term, though, there's going to be volatile. We saw it like with the tweet over the last 2 days. Now, the thing is that right now, retail crypto trading, if you look at the fees there, I do believe that's over-earning as an industry. If you look at stock brokerages, how the commissions kind of came down over the last 2 decades, I do think that we're going to see that with retail crypto trading. So crypto is here to stay, but the trading fees would compress over time.
Shepard Smith here. Thanks for watching CNBC on YouTube.